Jacques and I discussed it in September, I guess, or August 2006, so 9.5 years ago. We've been investing together for 10 years before that, but we've been talking about it for a long time, and finally in 2006 we said, let's put this together, let's raise some money, and let's get going, because we think we're pretty solid on the investment side. And yeah, it's coming up. It's our 9th calendar year, which is amazing. Anyway, we've been at it. I remember the day we started. Here we are, still in business, doing fairly well. Jacques and I run the firm. It's the two of us. What can I tell you? We co-own the firm. We're privately owned, and our goal is to run one of the top performing investment funds in the country. Well, both Jacques and I are finance people. Me specifically, I went to Queen's, Commerce 86, did 7 years on Bay Street, worked at a small shop called Merrill Lynch, worked in the corporate finance department, worked for a fellow named Ed Clark, went on to had a stellar career in banking, did a lot of finance work, a lot of corporate finance work, went to INSEAD in Europe, and then I moved to Montreal. I met Jacques my first day of work, and we started up a very entrepreneurial company. Charles Sirois backed it, called Telesystem International Wireless. Very successful company, went public, became a multi-billion-dollar company, and Jacques and I worked together on a number of projects all over the world, right? All international, Telesystem International Wireless. So we were finance guys doing work in India, China, Eastern Europe, all over Latin America. So a very exciting period of our lives, and the business was sold to Vodafone, I guess 10 years after we started, for $6 billion. Well, the firm's a product of Jacques Lacroix and myself. We started going on almost 10 years ago now. Listen, we're both finance guys with a lot of international experience. We think it's very difficult to run money. It's not simple. It's a lot of work. We have a very specific philosophy. We believe you need to be long and short within the same fund. We don't believe in leverage. We believe you need a tremendous amount of experience just to differentiate between what's a great opportunity and what is in fact something to be avoided. We believe you need to have your own money invested in the firm, and we have all of our money, investable capital, in the firm. We believe you need to be sector specific. You are not going to make a lot of money just buying indices. Following any indice is going to give you mediocre returns. What you need to do is understand where you want to allocate your money. So sector specific, think globally. We do that all day long. I think if you're not thinking globally, you shouldn't even be in this business, kind of thing. You need a lot of experience particularly in finance, and you need to have been through some rough times. Jacques and I have been working together for 23 years in various different businesses. We've seen a lot. We've been through a bunch of crises. You need that kind of experience just to figure out what to do with your investment capital, today and tomorrow. Well, first of all, the policy is we need to get consensus on any significant investment idea, right? So if Jacques thinks my idea is the stupidest idea in the world, we don't invest, and vice versa. So we work together. It's a collaborative effort. Nobody's always right in this business. If you're 60% right, you're doing extremely well. So it's to come to an agreement over time. We're not big day traders or anything like this. We put our money, our capital to work, and sometimes it takes years for it to pay off. And so it's a very collaborative approach. The great thing about this business is you can tap into some of the smartest minds in the world. It's about having access to their views, and so you can grab ideas from all sorts of people, very gifted people. The question is who to listen to and when. You need to work extremely hard in this business. It's 110 hours a week minimum. Anybody thinks they can do this as a part-time job is just it's laughable, and which probably explains why a lot of our competitors have such unhealthy returns, right? Yeah, I mean, we're fairly good. We're finance people, okay? So Jacques in particular has the ability to analyze a balance sheet of any company very, very quickly. So we have this we've got 25 years each in the finance world. We're pretty good at the numbers, but I think what we're really good at is figuring out what sectors you want to be in and when. And frankly, we short stocks, we short industries, we short sectors, and this is the best way to balance off the risk, right? Because we live in volatile times. So what you want to do is be invested in certain parts of the economy, and you may want to avoid, and frankly, you may want to be short other parts of the economy. We've been doing it now, 9+ years, and we're pretty good at choosing the sectors. So we've been in many sectors and been weighted up to 20-25% of the portfolio in a sector, and we have no problem selling it out and getting out. That's probably the reason we've had the most success. We've been beating the index by a full 10% a year since we started. You don't do that all that easily. Okay, what makes us stand out is we call ourselves a hedge fund. We are a long-short value investment fund. Okay, we use no leverage. A lot of times people associate a hedge fund with using quite a bit of leverage and taking dramatic risk or substantial risk. We don't really view it that way. We're trying to run what you might consider more conservative hedge fund. So long short though, we fundamentally believe that you can make quite a bit of money and hedge out your risk on the short side. So we're active in doing that. That differentiates us from most of the investment funds in the country. When it comes to hedge funds, I'm not sure, because there are probably 300-400 funds in Canada alone. I'm not sure why there's so much underperformance, but it probably has to do with the leverage, because we've had so much volatility in the markets over the years that if you use even 2 times leverage, 3 times leverage, you can get yourself into trouble. We've managed to outperform because we're fairly good at picking the trends and the sectors that you want to be invested in. So you go long and short within a given sector. And listen, we're finance guys. We don't pretend to understand everything about the businesses we're investing in, but we sure can figure out, what's trading at 5-6 times cash flow and what's trading at 312 times cash flow. We go long value wherever we can find it, and we short things that get ridiculously overvalued. And it happens. It happens all the time. The big overriding principle is we believe that the Canadian markets, equity markets in particular, are not all that efficient. Okay, and why is that? Well, there are many exciting companies within Canada where most of their business plan, in fact, is abroad. They're unique to the markets. There's no comparable company, so these things become like orphan stocks. They're kind of all by themselves, and it's not easy to figure out what the value is or what the opportunity is. So that's where we like to play. We love to play in companies, high growth companies that are global in nature, and they may just be listed here in Canada. There are plenty of them. It's difficult to understand what the value is, but sometimes you get these opportunities to buy these things at 4 or 5 times cash flow, and growing at 30-40% a year. This is where you can make exceptional returns. I should tell you that at our offices we host a tremendous amount of people. We're based here in Montreal. We host a tremendous number of companies come and see us. So by being in Montreal, we get this terrific chance. If we were in New York City, nobody would come to visit our offices. We're still a small shop. But here in Montreal, we see north of 250 CEOs a year come to visit us. That's a terrific opportunity. We're equity focused. We don't spend a lot of time in the bond market. Yields these days are so low that it amazes me that people spend a lot of time, focusing on where interest rates are going. We think it's much more useful to take a global approach and look at the currency market, and we do that extensively. Why? Because the governments often make their intentions clear, and so you get a chance to play with the currency without worrying about whether interest rates are going from 1.5% to 1% or maybe up to 2%. But we hedge a lot of our risk. So we own the equities. We may own a lot of U.S. equities. We may own a lot of commodity-based equities. We can offset a lot of that by being short the currencies. Short the U.S. dollar, short the euro. We've been short the Japanese yen for 2.5 years now, and we've been big time short the Canadian dollar the last 18 months. We have a very impressive list of investors. They're all high net worth people. A lot of executives. People that are very active in their profession. We're not a particularly fund. We're up to just north of $40 million in capital. All of it high net worth. I'd say probably 35-40% of them are active executives in various fields. We ask people who invest with us to help us run the fund. So and that's worked very well. You know, we have a lot of finance people in our fund. We have a lot of CEOs, CFOs, or the head of strategy of many Canadian companies. BT Global Growth Fund is, we think, a terrific investment vehicle. We're very unique, we believe, in Canada. So we're a long-short value investing fund. We use no leverage. Okay, we use currency hedging, which is, I'm sure most investors know, with the volatility of the currency markets. If you haven't figured out which currency you should be in, you better. We do a lot of hedging. We do a lot of shorting. We've made a lot of money on the short side, but we've made most of our returns on the long side. We think it's a very intelligent way to invest. We have lots of competitors in Canada, but you know, I think our track record speaks to itself. I mean, we're up, let me tell you, 12.5% compounded over the last 9 years. That's going through two crises. That's the crisis of 2008, the financial crisis, and as well as the commodity crisis that hit Canada. We've been able to make good returns all the way through that period of time. I mean, the stock market's returned 5-6% at the same time. So we're doing double the market, and we think with 60% of the risk, because we never have 100% long only exposure to the markets. In the money management business, I think you need a couple of traits that you really have to have. You have to have 20 plus years in finance. You need to have international experience. I don't understand how you pretend you can manage money in this world without having a lot of time spent in Asia, Latin America, Europe, and North America. You need to be in an environment where you can work with people that are very smart, very bright, and that you can work well with, because you are going to be wrong a lot of the time. So you need to create an environment where you can agree and you can make mistakes, and nobody's going to beat you up over the mistakes you have. You need to be very humble, but you need to be also prepared to take risks. And you need to understand that you need to have all of your money invested in your particular fund. You need to be focused on it. You need to work 110 hours a week. And these are the characteristics we bring. You also have to be prepared to look to new ideas. And I think that's what Jacques and I and our entire team bring to the table. We have continually found new and exciting investment opportunities. That's because we go looking for them, and they come to us. And if you're not working at 110 hours a week, you're not going to see them, right? So you need all those characteristics in one fund. Well, try to find that in Canada. I think you'll end up at our place, and you'll end up at maybe 4 or 5 other firms, but it's tough to find. The way to make substantial, significant investment returns is to find companies that are global in nature and have an opportunity to hit the ball out of the park. And Canada is a terrific place to find these companies, because often you find them and they really haven't been discovered by our American friends or whatever, and who are prepared to take any story to much higher multiples than you'd find in Canada. So that's what we look for: global companies, big growth opportunities, and good value. And listen, we've been doing this for a while now, and we consistently find these companies. I don't think that's going to change. And then on the other hand, you're going to find companies that have ridiculous valuations, or maybe not global at all, in fact have significant investment risk. And listen, short these things, go long good value, and over time you should have good returns. I mean, look, I think our track record speaks to itself. I mean, remember, Jacques and I had trouble raising money when we were only in our first or second or third year. That I understand. But 9 years in the business now of substantial outperformance. I think we've proven that we can do this. We're not going to stop. We'll be doing this for another 9 years, and we'd love people to come join us, and everybody's welcome.